Hey everyone, this is Rangadad. Not financial advice, just the way I'm looking at the market. Um, it's been doing a little bit of more research around um, where we might actually be in the macro environment at the moment. So I think this year, just based on what we've seen, we're still not seeing much interest from retail in terms of like just everybody talking about it, people throwing money in with no real idea. I've said it before, but I think this cycle is more about institutional money coming in and what's going to happen into the future around that. And I think you can see that in the performance of the alts. There's not many alts that have actually gone to new all-time highs in this run. And typically by the time we got here, you would have seen that quite a bit. But just a quick one on Bitcoin itself. BBWP's dropping off again now, so it looks like this might be tapering off in terms of the run. We've come back and reclaimed the 50 EMA as well, and it actually seems to be holding that on the shorter time frames as well. We've actually the 15-minute 50 EMA is pretty well at price action at the moment. It's just bouncing off that there. So where are we with the so yeah, we are also hitting the underside of the pivots. So it's kind of bouncing at the moment between the pivots and the 50 EMA on the daily. We are still within this cloud. Decent vector candle there, but it's really been a flat weekend. Not much action in either direction. We do have CME should open in about 3.5 hours. And the price on CME was about 95 something. Yeah, 95 200. So we're a little bit below that at the moment, about $500 below that. Not a huge deal. If we're opening up well below that, then you'd think, okay, we could potentially get a bounce, but yeah, no real read as far as I am concerned on that one. I'm still interested in this big red vector candle up here. I think that's still a target, that 100K level. I do still kind of like the look of that as a potential target, but I'd also be looking at it as a potential reversal point as well, somewhere around there to come back down again. So it's a very interesting thing. Like people that say you should use the 70% for your volume profiles. This is the 40% region, the volume profile, and you can see the jump in volume at those levels. I've been using the 40% for a while now, and it seems to give some pretty good levels. The fact that we didn't have another close below it here, we closed back within it, closed back above the 50 EMA, that's a pretty good sign there. So, you know, at this stage, it kind of looks like it wants to go bullish again. Stochastic momentum is starting to slow down to the downside. It's still angled down, but all we need for that to switch up is one decent day to the upside, which could suggest we'll take the majority of these candles here. So it's actually looking at this chart alone, it's hard to be bearish. But there are some other factors that are at play here, which are sort of underlying all this price action, which I'm a little concerned about still, which we'll get into in a second. So we've come into this region twice now. The 92 level is still proving itself as a very resilient level, but I think if we come down there again, it's going to be hard to hold it just because there's so much liquidity just below there. The more times you test a level, the weaker it gets. So that's something to keep in mind there. If that were to happen, this would probably come down into the bearish control zone, and basically before going long again, you would want this to be actually coming back out of this bearish control zone, ticking to the upside. So it's kind of, unfortunately, as is the case most of the time, there is a case for both directions here. It did reject the point of control there as well on Friday. That's a little bit of a concern. We haven't got back up to that point yet either. And on the shorter time frames, there isn't actually a lot of vector candles left. So we'd have to, there is a wick here, 96, but we've kind of reclaimed most of the decent wicks that were to the upside. You pretty much, if we do break above the current high, that point of control, basically, if we break above the point of control, I actually would expect it to come at least up to the 100,500 roughly. That would be a sort of a minimum target, and it wouldn't surprise me if it comes up to the 101,300 level. But there is still plenty of liquidity up here. There's plenty of liquidity up around the 105 level as well. But that would be a pretty significant move as well. And I think we need to see some macro turnarounds for that to actually happen. The other the other issue here is there is significant vector candles to the downside here as well. So that's another thing to be wary of. Fully expected to come back into the 92,300 level at some stage. Thing is whether it comes there now and then goes up, or whether it actually goes up, tags those higher levels up around the 100K mark before coming back down. It's kind of a coin flip at the moment. Just going into the larger time frames, the 1 hour. Again, big wick down here that tends to like to come into, but momentum's kind of still suggesting upside at the moment. 4 hour. Again, momentum's kind of the upside. Decent retest at the 5 EMA there. So it does kind of look like more upside is likely, at least into that 100K level. If we reject off that, then I do actually expect the next move down to be a decent one, probably into the 80s somewhere. All right, and so as everyone would know, stocks in general in the US were down again on Friday. We did suspect that was going to be the case. Still not breaking any lows on the equal weight. Not super concerned about it at the moment. It's more just equal weight S&P has actually closed a new low there. That's not a great sign. Still a fair bit of support below here, but I think the main issue for all this is whether the forward-looking indicators that we've been using are actually starting, like the bond indicators, whether they're starting to actually pick back up or at least find their bottoms. And this particular one had a pretty good day on Friday. That's actually a good sign for markets. Still hasn't hit the levels that I'm super comfortable with. Kind of expected to come back just a tad more, but in effect, it's putting in a higher low there compared to this one, which compared to that would actually be bullish divergence as well. So not a bad little turnaround there. The Aussie bonds, signs of a little bit of strength there, but momentum still pretty well to the downside. High yield junk still coming down pretty hard too. Again, this is a good level for a bounce, but you would have to say, looking at this, that it's probably going to come back down into this trend line again, which would pick up more of this vector candle and a reasonably highly traded zone there as well. So I'd be expecting a bounce more around here, which would suggest another couple of days down. But if this indicator continues to the upside, then I'd expect that to be the bottom. TLT, it's getting some interest down here, getting some bids. It's pretty well closed that gap now. Wouldn't be surprised if it comes into that 84.5 level still. But I think that's starting to get pretty close to the bottom. XLY, XLP is still elevated. Same with the equal weight. These things, they don't look healthy individually, but we are coming into some pretty highly traded zones as well. Global liquidity is starting to look like it wants to tick back up as well, which is a good sign. And this one here, so consumer discretionary at a fairly critical level. If that breaks down, we may see a bit more downside on the market, but some may say that close is actually pretty bearish anyway. It's a bit of a tough read. KRE, that's not a great close for KRE as well. So regional banking is probably going to struggle for another couple of days yet. Pick up this vector candle in here. ITB, the home construction is still looking weak. Got a pretty strong support level here. Wait and see if it gets to it. If it does, I would expect a bounce there, especially since momentum is recovering as we're coming down at the moment. So yeah, same deal with home builders. SMH. SMEs are back into their channel. No real read on that yet. It's just choppiness. DJ Gold broke below again, so that does suggest more weakness on the market as well. Coming up. Same with DJT Gold, but this one's probably coming in, getting pretty close to a level where it should bounce. Both of them probably one or two more down days and then some sideways before a push up. So it's kind of aligning with that theory that a couple more days down, a little bit more down, probably until we're within a couple of days of the inauguration. And then we should see a bounce just before that. You'll probably see just the first signs of an uptick in the few days before the inauguration. VIX, it looks like it's probably going to come up to this 23 level. I wouldn't surprise to have another couple of down days there. It is trending up. The skew was down again, so that's aligning with another couple of days down, or at least another day down. And the VIX 1-day, I mean, it has started to come down, which we've already suggested that typically aligns with further upside. So a little bit of a mixed read there. I'm not going to call that a bounce point yet. DAX is rolling over again. It's looking more and more like markets may have actually peaked already in many ways. So if we do get a new high on Bitcoin, not sure that it's going to last very long or be very high. Need to see a lot more liquidity coming into the market for that to be the case. UK 100, Japanese yen, coming into an interesting area there on the Japanese yen. Japanese yen's still got some vectors at the highs here too, so there is still some signs that we may get more upside on some of these markets. I think like 2025, all the stats are suggesting choppy, but it's also probably going to be once it finds that final direction, the drop's going to be pretty significant. Interesting one there on 2-year yields, right at a critical point. I don't really have the right ticker there for getting volume on that. Oh, it doesn't have volume anyway. Sorry. But yeah, you'd expect a little bit of resistance up here. In fact, we've broken out of that wedge. Might get a retest of it and then a move away. You might not too. Everyone's saying this is going to 5. That is certainly a potential. That was a pretty strong breakthrough, that key level that we had. So if yields are going up, then markets are probably coming down. The Chinese 10-year yields are starting to tick back up a little bit. That's not a bad thing. 2-year yields have jumped quite a lot. So that's probably a decent sign that that's probably what's causing a little bit of a bump in global liquidity. Copper didn't really get up to this trend line yet, and pulling back at this previous resistance. So not looking great. Gold. Yeah, that's a pretty decent breakout, to be honest. Consumer sentiment. Yeah, consumer sentiment's down a bit. Unemployment rate down a little bit. On-farm payrolls, yeah. Can't trust these too much, but that's why yields are going up, because they're thinking that the economy is looking good enough that rates are going to stay high. Yeah. Gold's looking pretty good though, actually. BBWP increasing to the upside in the bullish control zone. Yeah, basically, to see a turn on gold, you would probably expect this, or you'd want to see this come back out of the bullish control zone. And I would expect it to actually get up and touch new all-time highs on this run, to be honest. And when gold's running and rates are like yields are high, doesn't look good for the economy. Probably some resistance around that 2740 mark though as well, and I guess probably some resistance around these two highs here as well. 2717. Silver looking pretty decent. It didn't really do any sort of retrace like I noted there, but I would expect silver to get up pretty close to that 32 mark on this run. BBWP's had a big reset as well, so it could run pretty hard, silver. And gold silver ratio, sorry, silver to gold ratio, it's looking okay as well. Decent day to the upside there. Should see silver go pretty hard against gold. Oil sort of got here a lot quicker than I thought it would. Bit of a rejection wick off there, which you would expect. Kind of expect this to come and try this area again, though. I think a rejection like that, I don't know that that's the end of this particular run to the upside. Certainly, BBWP and momentum would suggest there's more in it. Dixie, 110. Yeah, a lot of people calling for 112 on Dixie at the moment. I think 110 is probably just because of the volumes here. We may sweep a little bit higher than 110, but it would reclaim the rest of this vector here and kind of expect a pullback from that area rather than getting all the way to 112. And even, to be honest with you, 112, it'll probably smash through 112 if it gets there as well. There's going to be a lot of interest up around here. Interest in a rejection, that is. So, yeah, I'd say be careful of the 110, but a couple more days up on this would see, again, agree with stocks coming down a little bit. And then a rejection from this could see the bottoming in stocks. Euros still struggling. Lowest close in a while. I think the Aussie's still struggling as well. Yeah, that's a nasty close on the Aussie there, especially with BBWP ticking back up like that. You'd expect the Aussie to go towards these sort of levels, to be honest. The old COVID lows sitting, where are we sitting? Just in here. Yeah, I suspect the Aussie dollar's going a bit lower, into the 50s. It might have a pullback at about that level there, actually. Just gonna so 59.8. That would actually be a reasonable level for a bounce. If it did that, probably going to be on bullish divergence as well. So just looking at global liquidity, as you can see, the Chinese 2-year, 10-year has basically held this, at least in this region, for a little bit. If you look at it as a line graph, it actually has made a higher low. Want to see this continuing to the upside to really suggest that markets are going to bounce, though. No real confirmation of that yet. Apple, so Mag 7 still looking weak-ish. Momentum's ticking to the downside. Percentage of stocks above 50-day moving average has come down again. So basically, still pressuring this level here. I think this is a fairly key level. If we break below that, then the market's probably going to come down even further. Yeah, it's looking like it should actually be a decent reset on the markets, and we're seeing price hold, which is strange. And I think it's potentially because everyone's like the amount of puts that are in the system at the moment is nuts compared to the amount of calls that are in the system. And typically when that happens, you get squeezes to the upside. So got to be a bit wary of that. Yeah, Nvidia, no real read on that again. It's kind of meh. It's not falling too hard. If we get a bounce off this value area high here, it's also a pretty key support level. So I think a second bounce in the next couple of days again would see further upside in the market. If Nvidia breaks these levels here, then the market's going to have further downside. So at the moment, it's the difference between the correction that we're in at the moment of, say, top to bottom, we've done 5%, or is it 10%? They're the two key levels, basically. And your 10% is down into this vector candle here. So you'd actually probably think it'd go down closer to 12%, 10 into 43s. Everyone's looking at this 56 and a half as a key level, just because of this gap close here. I don't know that it would stop there, but it probably would have a decent bounce there. So I guess macro-wise, things in general aren't looking great. And there was a stat, if you go into YouTube and look up, what's the name? Bravos Research. Bravos Research put a short out the other day, which is interesting. It looks at the S&P 500 inflation adjusted chart and looks at the channel that basically it tends to stay in most of the time, and then peaks above that channel tend to lead to pretty massive corrections. Like we're talking 1913, 1929, 1965, like 1999 sort of level. And yeah, we're above that again. So we're still macro wise looking like we may have actually peaked already. So any bounces that we see, we're going to be looking pretty closely for whether or not we get rejected early. And the weekly is pretty critical here. The weekly has closed above the 20 EMA. If we actually change this to SMA, it has closed below it. Now, I haven't actually seen a close below it apart from this point here on the futures. Let's go to the SPX. So that's actually the first close below it on the SPX in quite a while. Once we do close below it, it tends to actually lead to more downside. Little bounce, but typically more downside. So, not always though. Coming off the bottom, it can bounce pretty quickly. But yeah, typically closures below aren't great. It's just, are we in this sort of region here where we're going to bounce on the weekly? a little bit longer, or you know, are we in this region here? Tough one to tell, but you know, this is a pretty massive divergence too. So at the moment, there's still some pretty reasonable indicators that we still get some more upside before the crash. And I think that's coupled with the fact that so many people are expecting a massive crash and so many people are short on options. I just think if, like, we could have a cascade down, so similar to what happens on the positive gamma, we could have a negative gamma situation and you see a massive sell-off to cover all those options. But yeah, at this stage, still seems like we're getting close to a bottom. It's just whether or not we see a massive dump on a daily candle now that we've sort of closed below here. It's really hard to tell. But yeah, I think selling at these points probably isn't at this stage. I don't think it's the smartest thing. But on the daily, if we're getting back up and rejecting this downward trend line here, then it's probably a good point to actually sell and just wait for a bottom, probably on the weekly, to be honest. But yeah, it's tricky because we're in the same sort of level that, you know, another week down here or even another week up and we still might not find the bottom yet. So the momentum lags a bit too much for my liking on weekly charts. I don't tend not to use it on anything more than a daily. So let's just, we'll go over to some of these other reads that we got. Liquidation levels. I think looking at where we're at here, just on 48 hours, it left a bit of liquidity above here. Kind of thinking it might want to go back up and take this. But there is, as you can see, there's a fair bit below as well. We go back to the weekly, picks up a bit more. So the weekly suggests massive amounts above here. And at the moment, that seems to be quite attractive to price. So, and that's all coming over the weekend. So a lot of shorters coming in to the markets over the weekend. And I think for Bitcoin in particular, that could actually lead to upside. And realistically, looking at the options on the general markets, that could actually lead to upside as well. So this is why it's a bit 50-50 for me at the moment. Yeah, it's tough. I think I'm still leaning towards we get another push up before we come back down properly. One thing I've been looking at a little bit just this morning is the cumulative volume delta and looking at it on the longer time frames as well. So this here, we're still not getting much of an uptick in CVD. We're getting a fair bit of basically sell pressure at the peak here, but there's plenty of pressure to buy the dip as well. So if we hold this sort of level here, it will be holding the tops of the weekend, like the chop over the weekend. And I would expect it to come back up into these levels and take that liquidity that's sitting above. But CVD, it's flat. I'd like to see this start to run back up. Now, the issue with that is it's pretty well been dropping all the way up on the macro scale. CVD is pretty well. Still in a downward trend, and it has been since we got a little bit of an uptick off the lows on the breakout. So just in here, started to uptick just as we were breaking out of the range that we were in for months, 6, 7 months, whatever it was. And that was kind of a good sign on the way up. But ever since, even just the first peak here, so this first peak at, what's that level? Basically 102, sorry, not 102, 99,500. It's been dropping consistently. So open interest is still high, it's still elevated from those levels. But I think at this stage, it looks like there's more people looking to sell this in terms of volume than there is buy it. So yeah, it's something to keep in mind. We haven't really seen a 1 hour uptick on this either yet. And if you go back further in history with this, I went back and looked at on the daily. You can see here there was an uptick in cumulative volume delta. Unfortunately, the records don't really go back very far on this, but you can see it was dropping pretty hard, and then finally we got an uptick just as we were starting to have this decent pump here, and then ever since then it's actually been decreasing, apart from this small uptick on this run up. So if you're looking for another run up and for it to be confirmed as potential breakout, you actually on the daily you want to see this starting to get a fair bit of interest. So you want to see a few days in a row of upside, and we just haven't really seen that since that top. So something to keep in mind. Looks like there's a fair amount of selling pressure. All right, I think that was about all I wanted to cover on that. Just looking at the volumes, technology sector seems to be getting a lot of interest around this level. It doesn't look great. Looking very heavy at the moment. Ethereum, haven't got any major reads on that in terms of single trades. So I'm not seeing many buyers come in at these levels either. So, big trades at the highs here, decent trade there, but that was probably a buy, bit of buying pressure on that. But yeah, I'm not seeing huge amounts of buys. So this is a 90-day on Marathon Digital. Decent buy at the bottom here. It's just whether or not these are distributions on the way down or buying on the way down. That I would think is a buy, which would be a good sign, especially since we had some upside after that. But in general, no great read. You can see though the amount of selling that came in at the top here, the amount of big orders on the dark pools. Kind of on any sort of peak, we're going to be looking for similar clusters. So IBIT, just again showing a 90-day, yeah, decent trade here, but it needs to sort of hold this level, I think, for this to be confirmed as a buy, or another decent order to come in. I'm only showing the 10 largest trades here. If we go to a shorter time frame, let's go 30 days. Hurry up. So yeah, not seeing any huge orders come through in the last couple of days in terms of the 10 largest being shown. Maybe, yeah, okay. So there's one in the 20th largest. That's not bad. It is suggesting more upside, and we have seen a bit of upside since then. So, you know, there was a few days of outflows in ETFs, but nothing major. The overall 7 days is still positive in the ETFs. Coin would have been nice to see a bit more interest here at the on the Friday. See if there's anything in the 20th largest. Yeah, so there is a bit of interest here, I think. Didn't make the top 100, but it seems to be a fairly heavily defended level, and that is a pretty decent sign. Let's just get largest on this one. Yeah, not seeing anything there, which is a little disappointing. So I wouldn't really call this confirmation yet. But yeah, this is interesting when you look at it on the weekly, but we come back out to a monthly as well, then the story changes a little bit compared to this area that's above that we're getting excited about. There is a lot below here as well. So back down into that 90K zone. And if we go up, it's probably suggesting potentially a target close to that 105 level, 104 again. There is plenty of liquidity to the upside, so that is a good sign. I think it will want to come and take that at some stage, but it's just whether at the moment, given the macro outlook on stocks, got to be pretty careful with longs still. And shorts are going to be tricky. Like shorting Bitcoin is just fraught with danger. But yeah, in fact, we've got a fair bit of liquidity sitting below us there. Just it's only a matter of time before we take that. I think it's a bit of a coin flip. So the shorter time frames will probably see us well, they'll probably govern the what happens. And it looks like we are getting a bit heavy on the longs, but when you zoom out, even the 7 day still has a lot of shorts in the system, short liquidations, that is. So, yeah, sweep to the upside, up into even the 97.5 level. That would take out a lot of that liquidity that's in the charts. And then it's kind of a coin flip as to which way it'll go. Whether it gathers a bit of steam or not, just have to wait and see. And looking at this particular chart, it may actually, like it doesn't actually look like it really needs to even get up to the 99K level, to be honest. The 97.5 is probably going to be even, I mean, let's say 98. If it gets to 98 or just below there and rejects, then I'd say it's probably done for the time being, which have a quick look back at the levels. The value area high is sitting around high 98. So That's still a target. It is a previous rejection zone up around. What is that? Oh, open. Sorry, 99,400 was a previous rejection zone as well. So yeah, a sweep up into those levels. We're going to have to be watching pretty closely to see on the shorter time frames. Probably the hourly is going to be a critical one there to see if we're actually going to potentially go a bit higher. I'll just come into the hourly on this as well. So on most time frames at the moment, we're actually sitting around the 50 EMA. This is a pretty good pullback into that 50 EMA, to be honest. Little bit of room to move on the cyclic RSI, but coming down pretty hard too. Be looking for decent volume to the upside here, and not just a reclamation of that 1 hour vector candle. Yeah, looking okay. It has rejected basically the 200 EMA on the hourly. That's something to keep in mind. But if we can break the 200 on the hourly, then that would be a decent break of the 50 on the 4 hour as well, which 4 hour cyclic RSI is still trudging to the upside after coming off some decent bullish divergence down here. It's not convincing yet by any means. Like, it was a slow weekend, so tough read, but it needs to really break through that 50 EMA. And if we're breaking these levels, then like 96K seems like a pretty critical level to break. If we're going to go like big time bullish and get back up into the 100K sort of level, 96K is going to be pretty critical. But yeah, shorter time frames, it's not looking bad. We are above the 50 EMA. Looks like it's got some interest in staying there. So that's looking okay. It's just whether stocks drag everything down as well. But if we're looking at alts and stuff, alts are going to be pretty tricky as well, I think. It's just doesn't seem to be much liquidity coming into the space. For markets to go up, you need liquidity. You need money coming in, especially if there is selling pressure on that cumulative volume. XRP is the one that's been looking strongest out of most of the alts still. Although that's not looking particularly great there. In fact, XRP looks like it's about to come back quite a bit. I'd be taking some profits if I had some open XRP positions. But a lot of the alts are sort of trending back to the upside, which is a good sign as well. Like, you want them to be kind of turning around. SUI doesn't look great. Be nice to see this sort of making some higher lows, higher highs, but it's not. That looks like it's basing. Render looks like it's potentially basing, but they're not looking bad. Retesting previous levels. You just don't want it to be breaking down back below these levels again, because that would suggest further downside. And with a lot of them, the cyclic RSI is sort of pulling down out of quite elevated levels coming off these tops. They are leaving a lot of liquidity behind. A lot of red vector candles on a lot of these. AI market's still fairly bullish overall, longer time frames, but starting to show signs of weakness as well. Breaking back below this level here wasn't great for SUI AI. Yeah. Oh, what a pump and dump on grass. For the time being, it's just wedging. They're making higher lows but lower highs on macro sort of time frames. So realistically, I think we need to see, just do sentiment. No. Yeah, I mean, smart money's actually started to roll over a little bit. Dumb money's still coming out of the system though. Not a great read on smart money coming down like that. Probably taking a little bit of profits. But yeah, in general, it's a bit of a coin flip going into this week. Again, I'm leaning on general stock market. Still another couple of days down is what I'm leaning towards. At least a couple of days down. How big those days are will really depend on whether it's like a long squeeze or basically a gamma squeeze on to the downside on the option side of things. Yeah, in general, macro wise, we may have actually seen the top on stocks. Whether we've seen the top on Bitcoin yet, I'm waiting to call that. I'm still leaning towards no, we haven't. And one of the reasons, if you look at ETF inflows still coming through, and BlackRock pretty well, I think, would have a lot of inside information. The fact that gold is still moving to the upside, and in previous market crashes, gold has actually continued to the upside. And I'm talking major market resets. So, like your 2008, 2009, coming into that, we were at a similar position. So, 05, it was heading up. We started to get a bit of chop sideways, and then end of 07, which I think is pretty close to where we're at now, realistically, gold broke out again to the upside, and that was pretty well the end of this US stock market. And aside from a bit of a retrace in general, gold came back and retested that breakout level, but it continued to the upside for years after. I'm not suggesting Bitcoin's going to do the same thing. And like 2011 was basically when the markets became comfortable by the look of it, that, yeah, okay, we can go out of gold, out of safety, and back into some risk. And then again, sort of around that 2016 area, we started to get a little bit nervous again. And you can see here, like, the market was, like, I remember 2019, and the market was looking like it was potentially going to crash again, and people were sort of preparing for it. Like, uh, I think the fact that gold sort of had another run up from that, um, it wouldn't surprise me if that was again in prep for a major crash. And then, of course, we had COVID, and that changed the game a little bit. So, breakout of highs here in March, not a good sign. We start to break out of this high again, then I think that's probably going to be a signal that we're actually topping in the markets. Um, so something to keep in mind there. And realistically, gold, it was a bit of a favorite after the dot-com bust as well. So yeah, I don't like being bearish on markets because um, markets are bullish like 60+% of the time. Generally, if you're a perma bear, you're going to lose money over time. But again, can't ignore some of these macro signals that potentially we're topping and maybe even reach the top. It's something I'm going to be watching fairly closely. But yeah, gold looks like a reasonable buy at the moment. And realistically, Bitcoin at the moment may be being seen as digital gold still. And I know people hate that term, and there's a lot of people that have fights over the term digital gold. It's not gold, it's not physical, blah, 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 all sorts of bullshit around that. But when you got BlackRock encouraging the majority of the companies around the world to put money into Bitcoin as part of their investment portfolio, it does suggest that Bitcoin could take some of the same paths that gold would take in a similar situation. And Bitcoin, remembering why it was introduced originally, going back to the white paper, it's there to provide an exchange of value that the governments can't control. And in response to a financial crisis. So it would make a little bit of sense for Bitcoin to hold its own against stocks. I just don't know whether it's mature enough yet. And the price action is going to tell us that either way. But, shorter term, I think we're in a very dicey sort of area. Actually, I just noticed here, if we look at, where is it? Not a fib channel. Fucking hell. It's up here. We look at a parallel channel, probably coming down like that. Yeah, we're pretty close to the middle of this parallel channel too, and quite often you do get rejection off the middle of that. Saw a rejection here. At the moment, it's just a coin flip at the moment. I do still hold a lot of my positions. I have opened a short against Bitcoin more to sort of cover myself. It's something that's not going to, I guess, to a level where I can let it run up a bit. But yeah, it's kind of, again, you could draw this so many different ways at the moment. But think that makes a lot of sense there too. Somewhere around there. Potentially, that's probably a better channel, to be honest. Um, so yeah, just keep all that in mind. If we have a massive dump off in global equities, I do expect Bitcoin to come with it, and probably gold. To be honest with you, I don't see that happening yet. We haven't seen a major breakdown of anything yet in the news, and that's something that sort of suggests that we may have a bounce and more upside on markets and crypto. And that's why I'm leaning towards bullish at the moment, especially with so many vectors above to reclaim. But don't necessarily think that we're just going to go to the moon, and even 150 is looking less and less likely unless something major happens after inauguration and the market just gets flooded with money. So I think that'll do for today. This week's going to be fairly critical, I think, for Bitcoin. 3 hours left on this candle. It is a good thing if this candle closes above the open of the previous one. Still in the bullish control zone on the weekly, but not looking great. I've definitely seen better weekly closes than that. All right.